Today's episode of The Housing Show comes to you from Las Vegas. I'm here at the Mortgage Bankers Association's annual convention, and I got to speak to a great many interesting people within the industry about the issues and trends that impact mortgage professionals. Take a listen to what they have to say.
As you continue to grow your Ginnie Mae portfolio or your obligations list, we want you to hold approximately 1 year's worth of servicing fee as capital, as income, so that when losses do occur, because like I mentioned, these are actual obligations of our issuers that we're guaranteeing their ability to make up any losses in their portfolio. So we make sure they have plenty of capital. We're also worried about liquidity, because I mentioned before, a lot of our issuers now are non-banks. Banks have no problem with liquidity. They have deposits, checking accounts, everything else. But if you're an independent company, you've got to rely on money from Wall Street, from banks to have lines of credit and so forth. So we've now increased our amount of cash or cash equivalent type assets you have to hold on your balance sheet, again, to make sure they get through the rough spots. Because right now, with the quantitative easing the Fed's doing, the bank's system is awash with cash. Once quantitative easing stops and that liquidity dries up for the banking system, one of the first places probably going to hit is our issuers. We make sure that they have this cash set aside for the rainy day. So when it happens, they're able to do it. So we're asking to potentially hold back for every $1 billion of servicing to hold $1 million worth of cash on the balance sheet.
Well, the biggest thing is really the push out of our MARS platform, and that stands for Mortgage Analyst Review Software. And the challenge is in the post-closing and pre-funding is getting the technology ready for all the new Fannie Mae or GSE requirements. And so we have been, over a year ago, when the agencies when Fannie Mae began pushing out their new policies, we ramped up our technology and really first on the block with some of these new solutions. And some of it is meeting the seller's guide for the 2013-05 is where a mortgage bank or someone who sells a Fannie Mae has to audit their QC vendor. At the Miami conference, Fannie Mae released their spreadsheet for how to do that. However, if you're a QC manager, you don't want to spend hours and hours and hours a day entering data in a spreadsheet, maintaining a spreadsheet when the MARS platform can do that for you. So that's one thing. The next thing is Fannie Mae's talking about a manufacturing curing process. And what does that mean? Well, where are the defects of a mortgage loan for QC identified? You don't want that going into your defect scores that count against you. So in our platform, we're the first to offer the curing process for QC in a platform. So you don't get written up for missing documents. You have the ability to cure the manufacturing defects, and these would be insignificant or minor defects that would show up on your defect rate or defect scores. So we're trying to help our mortgage bankers to reduce their defect scores by providing a manufacturing curing process in the QC. And another thing that Fannie Mae is talking about is it's a new word, new terminology to the industry called MAP. It stands for Management Action Plan. And what that is, they want QC managers or executives to evaluate their trending process over a period of time and look at their eligibility defects and see if it's a training issue, personnel issue, process issue, or technology issue. And what we're doing in the MARS platform is capturing that ability for QC managers to track and trend those processes, the training, and all those items, and document it so they can meet that Fannie Mae requirement. So that's something we've been doing a lot of technology, software development in the areas of QC, whether pre-funding or post-closing.
We are just announcing a partnership with Allstate Appraisal, one of the largest appraisal companies in the country, to create an alternative valuation product that's going to give appraisers an opportunity to compete in the HELOC collateral valuation space.
Is this product now available?
It's available today, yes.
So they can get it through Bradford Technologies?
Well, they're going to get it through our partners.
All right.
One of our partners is Allstate, which is we're announcing here. We have two other partners. One is Valuation Link. Another one is an AMC called EAMC. They can get it through there. And we're working on a couple of others that I can't announce right now because we're under NDA. But we're hoping to have about 8 partners by the end of the year, giving appraisers this opportunity to compete in this valuation space that they've never been able to do before.
Hey there, it's Phil Hall of Mortgage News Network here at the MBA's Annual Convention. And one of the reasons I love going to these conventions is I get to catch up with such wonderful folks like Arlene Hyde from CoreLogic. Arlene, so nice to see you again.
Hey Phil, it's great to see you. Thanks for having me.
So what's new, different, and exciting with you and CoreLogic?
So CoreLogic is working with our clients hugely in the regulatory environment to help them focus on the customer experience and take things that they're not core competencies of the lender, like lien release, like document retrieval, like document recovery, some of the technology pieces in telemods, etc., and get them into our expertise, which it is, versus taking it out of theirs, right? They need to focus on the client experience. They need to focus on the customer. They need to focus on the servicing standards, that whole, everything that affects the customer, the borrower in their shop. So we focus on the core competencies that we can help them with and help them take expenses out.
I understand you have a new product coming out. Can you tell us a bit about that?
Right. We have a new product. It was specifically designed to help lenders and bankers and other AMCs in the appraisal review space. It's called the Appraisal Quality Compliance Report. It is a proprietary report that we designed, and it's a desktop standard 3 USPAP approved review product, and it's available nationwide, which is kind of a rarity these days.
Well, I also understand you have, pardon the pun, a gem of a product called Sapphire. What's this all about?
That's true. Sapphire is Veros's valuation management system. It allows for the fully automated ordering, receipt, QC of traditional valuation product, be that appraisals and all of its derivatives, be that broker price opinions, from front to back, from origination all the way through servicing, and then the review of those products on a fully automated basis, and then even management of the human review and reconciliation of those valuation products. Sapphire's been out for a while now, but we are introducing enhancements to that platform. One of the ones that I find most exciting is we've integrated some very nice processes to manage the payment flow as it relates to appraisals. So accepting and managing the borrower fee or the appraisal fee to the borrower from the lender, and then being able to tie that out and reconcile that with the fee that the lender then pays to the appraiser for that appraisal. So that's been received very, very well, and we're very excited to announce that here at this event.
Business is incredible. The 203K loan has opened up an unbelievable opportunity for folks to buy homes and actually to fix them up. So if they take a look at a home and they like it, but it needs work, this is actually a way for them to get a home. They don't have to move way out of town. They can live in town. They can get what they want. They get that new kitchen. They can get everything without having to come up with all that capital. It's fabulous. It's fantastic.
So Joey, what's new, different, and exciting at your company?
Well, Phil, we have lots going on at Wipro Gallagher Solutions. We continue to see a lot around the regulatory changes that are happening for 2015. But in addition to that, we really are focusing more on the customer experience piece, adding a lot of functionality to our consumer portals, our business-to-business portals, and even in the mobility space, increasing our focus on the mobility space. We really think that although everybody's focused on integrated disclosures, the August 1st, 2015 milestone date, let's just say, that really the differentiators that for lenders today can be at that customer experience level, and really pushing that integrated customer experience across all channels. So we're really looking at really more of an omni-channel experience for the borrower, whether they go into a branch, whether they're doing it on an iPad, whether they're doing it through a traditional B2C site. It's all the same in Wipro Gallagher in our net auction system. And we really feel that that's the way of the future. So from a mobility perspective, the millennials are the second largest population group in the U.S. behind the baby boomers. So really focusing on that self-service mortgage and what they can do for themselves is the way we see the world going.
A lot going on, Phil. We have a lot to do with first-time homebuyers. We're working on that. We're working on access to credit. And we're also working to partner in a larger way with the regulators, the consumer groups, everybody in Washington to really move the real estate market forward.
Well, we are very excited because the Mortgage Action Alliance hit a record-breaking 8,100 members at the end of this convention, so we're very, very excited.
Wow, how'd you do that?
Well, I've been traveling across the country for the last 2 years, trying to get people engaged and active and excited about our industry.
Well, I know we have some viewers out there who may not be familiar with the Alliance. Can you tell them what it's all about?
Actually, the Mortgage Action Alliance is an grassroots advocacy network that allows mortgage industry professionals to get engaged in their industry and have their voices heard.
So this is, you could call it a bit of a lobbying group.
It is. It's actually a way for people to individually let their voices be heard on issues that affect them every single day. So what they do is they just join. It's a free advocacy effort, and you do not have to be a member of the MBA. You don't have to do anything other than just sign up, put in your email address and your home address so that we can locate your legislative district. And then when there's a call to action, we send you an email and you just click a button.
Appraisal management companies now have a number of regulatory requirements at the state level that we didn't have a couple of years ago. And I think probably the biggest impact to the industry as a whole is we've got a number of different states with a number of different regulations, and it's interesting and it's difficult to keep up with all of them, and so it's added a lot of cost and complexity to the appraisal management business. On top of that, we also have our clients who are under a lot of scrutiny, as you know. I'm sure you've heard at this convention. And that scrutiny now with the third-party oversight guidelines is being taken down to our level as well. So we're facing a lot more in terms of not just audits, but the number of audits that we're facing from every lender and the intensity of those audits. So all of that has added a lot of cost and complexity to what was a fairly simple business just a few years ago.
And there you have it. Thanks for joining us today on The Housing Show. I'm Phil Hall. Hope to see you again next week. Peace out.
The Housing Show airs every Friday at 11 a.m. Eastern Time and can be viewed exclusively on MortgageNewsNetwork.com. Thanks for watching us here on Mortgage News Network. You know, you could be part of the action here. If you have a product or service for mortgage professionals, you can be a sponsor and have your commercial here on Mortgage News Network. And if you don't have a commercial, that's okay. We have plenty of clever and creative folks behind the camera who can make a commercial for you. For more information, please send an email to info@mortgagenewsnetwork.com. Or for immediate info, please call Beverly Bolnick, our National Sales Manager, at 516-409-5555, extension 4. And she'll tell you how you can be part of the action.
This is Mortgage News Network.